As 2026 dawned, a surprising shift emerged in the UK's manufacturing sector, a long-awaited sign of life after years of decline. For much of the past decade, British factories have faced mounting challenges, from global competition to supply chain disruptions and economic uncertainty. Yet, as the new year began, subtle but significant changes started to ripple through the industry. Factories nationwide picked up speed in December, offering a glimmer of hope amid persistent economic gloom. Production lines that had slowed or even halted in previous months were now buzzing with renewed activity, and order books began to fill up once again. This wasn't a dramatic surge, but a steady hum of machinery, a signal that the relentless downturn might finally be reversing. The sense of cautious optimism was palpable, as even small improvements felt monumental after such a prolonged slump. For workers and business owners, this uptick was a welcome reason to look ahead with cautious optimism. Many who had weathered layoffs and uncertainty now found themselves with renewed purpose, and conversations on the factory floor shifted from survival to growth. The Bank of England had forecast zero growth for the final quarter of 2025, so even modest manufacturing gains stood out. Analysts and policymakers took notice, wondering if this could mark the beginning of a broader economic turnaround. The big question, is this a fleeting blip or the start of a real recovery? Industry leaders are watching the data closely, aware that one good month doesn't guarantee a trend, but hopeful that momentum will build. For those on the ground, the news brought a much-needed psychological boost and a chance to reassess strategies for the year ahead. Teams are brainstorming new approaches, investing in technology, and exploring fresh markets to ensure the gains are not short-lived. No one's declaring victory, but the shift in direction is a reminder that opportunities for growth can emerge even in tough times. The resilience and adaptability of the UK's manufacturing workforce are once again being put to the test. The story of UK manufacturing isn't over yet. In fact, a new chapter may just be beginning, shaped by innovation, determination, and a renewed sense of possibility. Now, all eyes are on whether this momentum can carry into 2026, and if the sector can truly reclaim its place as a driving force in the British economy. To understand this shift, let's look at the Purchasing Managers' Index, or PMI, a monthly pulse check for manufacturing that's closely watched by economists, investors, and policymakers alike. The PMI surveys hundreds of purchasing managers about new orders, output, hiring, and supply chains, distilling their responses into a single number that reflects the health of the entire sector. Above 50 means growth, below 50, contraction. It's a simple threshold, but it carries big implications for jobs, investment, and confidence. For over a year, the UK's PMI was stuck below 50, signaling persistent contraction until December, when it finally rose to 50.6, breaking the streak. This small step over the line marked the fastest growth in 15 months and confirmed a second consecutive month of expansion, hinting at a possible turning point for the industry. The December reading was revised down slightly from an earlier estimate, underscoring the recovery's fragility and reminding us that progress can be easily reversed. Still, new orders grew for the first time since September 2024, and export orders and hiring stabilized, offering hope that the worst may be behind us. The PMI's rise isn't just a statistic, it's a sign that more companies are seeing new business, production is inching up, and optimism is slowly returning to factory floors. The pressure to cut back is finally easing for many firms, allowing them to plan ahead and invest in growth after months of uncertainty. The PMI offers a clear, evidence-based snapshot. At the close of 2025, UK manufacturing was finally turning a corner with momentum building, even if slowly. The recovery is cautious but real. Companies are moving forward, but with an eye on risks that could still derail progress. The question now, can it last? And will this fragile momentum be enough to carry UK manufacturing into a more stable future? November and December's positive PMI readings didn't just mark improvement, they ended a brutal 13-month contraction for UK manufacturing. For the first time in over a year, there was a glimmer of hope that the sector could finally turn the page on a difficult chapter. For more than a year, factories faced shrinking orders, declining output, and constant anxiety about jobs and survival. Every day brought new uncertainty, with workers and managers alike wondering if their livelihoods would last another month. Each month below 50 deepened the sense of crisis, making it harder to invest or plan for the future. The pressure was relentless, and the mood across the industry grew increasingly grim as the months dragged on. The cycle of decline became self-fulfilling, eroding confidence across the sector. As uncertainty spread, even companies that were holding on began to hesitate, delaying decisions and putting off much-needed upgrades. Breaking above 50 in November and holding in December was a powerful signal. The worst might be over. It was a moment of relief, a sign that the tide could finally be turning after months of struggle. The sector had found a floor and was starting to push upward. Factories began to see small but meaningful increases in orders, and the atmosphere on the shop floor shifted from despair to cautious optimism. This modest expansion is a crucial turning point, restoring some confidence and encouraging investment. Even a slight improvement can spark new conversations about growth and innovation. Positive trends, even small ones, can prompt companies to upgrade equipment or hire staff. When businesses sense momentum, they're more willing to take risks and invest in the future. The end of contraction is more than a statistic. It's a reason for the sector to look forward, not back. It's a chance to rebuild, to innovate, and to restore pride in UK manufacturing. The road to recovery is long, but the first step has been taken. There will be challenges ahead, but the sense of possibility is returning. Now, the challenge is to build on this fragile momentum, turning hope into lasting progress and ensuring the sector's future is brighter than its recent past. What powered this turnaround? Three main forces converged. First, businesses built up inventories in December, anticipating price hikes or supply chain issues, temporarily boosting orders. Second, the government's late November budget ended a period of uncertainty, freeing companies to move forward with delayed plans. Third, Jaguar Land Rover's recovery from a major cyber attack brought a surge in automotive output, rippling through the supply chain. These factors combined to lift manufacturing, but some of the growth was borrowed from the future or driven by one-off events. The recovery is complex, part organic, part strategic, part political. Understanding these drivers is key to judging whether the momentum is sustainable. The headline numbers are positive, but the foundation is still fragile. The real test will come as these temporary boosts fade. Despite growth, business optimism actually fell in December, a warning sign. Manufacturers remain wary, facing high costs for materials, energy, and labor. The payroll tax hike from 2024 still stings, and the overall tax environment feels increasingly burdensome. Many worry that rising costs will erase any gains from increased output. Global uncertainty and trade tensions add to the anxiety, making it hard to plan for the future. Even as factories hum a bit louder, boardrooms remain cautious. The mood for 2026, hopeful but far from confident. Inflation remains a stubborn threat to UK manufacturing's recovery. December's PMI showed rising input and output prices, evidence that cost pressures are far from over. Higher labor costs, driven by wage demands and the payroll tax hike, are feeding into higher prices for finished goods. This creates a feedback loop. Rising costs push up prices, fueling more inflation and wage demands. The Bank of England's recent rate cut aims to boost demand, but inflation complicates the picture. For manufacturers, balancing fair pay with competitiveness is a constant struggle. A recovery built on rising prices, not volumes, is unstable. The inflationary sting is a major brake on a full recovery. Sustainable growth will require taming these persistent cost pressures. Government tax policy remains a central concern for manufacturers. The November 2025 budget delayed most new tax hikes and spared businesses immediate pain, offering some relief. But the memory of the 2024 payroll tax hike lingers, and the overall tax burden is still seen as a major headwind. Higher taxes make UK firms less competitive internationally, raising costs and dampening investment. The delayed hikes create future uncertainty, and businesses want a clear, supportive industrial strategy. The November budget was a temporary reprieve, not a long-term fix. The sector's recovery depends as much on policy as on market demand. Jaguar Land Rover's story is a microcosm of UK manufacturing's challenges and resilience. A cyber attack in early 2025 forced JLR to halt operations, dragging down national output and disrupting supply chains. When JLR bounced back later in the year, it unleashed a surge of activity. Assembly lines restarted, backlogs cleared, suppliers reactivated. This JLR effect was a major driver of December's manufacturing rebound, but it also highlights the sector's vulnerability to shocks at major firms. Much of the recent growth was catch-up, not new demand. Relying on one-off recoveries isn't a sustainable strategy. The lesson: the sector needs broader, more diversified growth. JLR's recovery is good news, but the foundation must be stronger. As 2026 begins, UK manufacturing stands at a crossroads. The recent momentum is encouraging, but can it last? The Bank of England's rate cut could boost investment and demand, but structural challenges remain. High taxes, rising costs, and global competition still threaten the recovery. Business optimism is muted, and many fear gains will be short-lived. The sector's resilience is clear, but it needs sustained support to thrive. The next few months will reveal whether this fragile rebound can become a lasting revival. The gears of British industry are turning again, but the road ahead is uncertain.